Okay, so I'm Marjorie Adams. I'm the CEO of Fourlane. I'm going to be leading our call today. So we're going to be talking about basic inventory cleanup. It's year end. It's that time, right? I mean, this should be happening every month. Let's be really clear on that. But we're going to go through how to do some basic inventory cleanup to make your file a little bit healthier. I've been seeing a lot of things online lately about making journal entries to inventory, making adjustments to inventory. These kinds of things should not need to be happening. So we're going to talk about that a little bit today. All right, let's go ahead to our next slide. So we've talked in the most recent weeks a lot about inventory. What is inventory? How should inventory be treated? So inventory, right, the thing that makes inventory special is that when we are looking at our account, our item setup inside of QuickBooks, we have an asset account. Okay. Whereas if we're looking at just like a service item, there is no asset account. You can choose an asset account for the cost of goods sold or the income account, but you cannot choose you cannot have that third account, right? That asset account at the very bottom. So what does that mean, right? So why does that matter? So with the inventory, we're going to go through this today. So I'm just pulling it up on the screen, giving you a second to kind of read through it, but these are the steps we're going to go through. Inventory valuation summary report should always tie out to our balance sheet. So let's hop into QuickBooks. I like to function in there more. So what does that mean? When I come in, if I go in to look at my reports down to inventory, if you don't see inventory in here, by the way, you might not have it turned on. If you don't see purchase orders, you might not have inventory turned on. We go to inventory valuation summary report. Now, when I run this report, it's going to default to whatever day it thinks today is. This is a sample file, so it thinks it's 12/15/2023. But this asset value on the inventory valuation report should always tie out to our balance sheet for inventory. Okay. Now you want to confirm that they're running as of the same date. If I move this a day ahead, then the inventory valuation, we're looking at different periods of time. But right here, our inventory asset is showing $50,488.36. Our inventory valuation summary is showing $31,543.87. They are not in balance. So our subledger is not tying out to our balance sheet, and they always should. Now, a lot of times what we'll see is people will go in and they'll just force a journal entry. That is not cleaning up inventory, right? Because what that's saying, if you force a journal entry through, what's that saying is my asset value that I have here, my asset value is actually not correct. And then also, maybe the problem is that my average cost is wrong, or maybe the problem is negative inventory. Maybe some of the things that we're going to be looking at today are the problem. And why that's an issue is that if we are not, when we utilize the items, picking up the correct value that we should be using, then then our costing is wrong at the point of sale. So what we want to do and what we should be doing at the close of every month is running our balance sheet, having all the subledger reports that substantiate the balance sheet, and one of those reports should be this inventory valuation summary. So what we're going to do today is we're going to go through a couple of quick steps, right? Quick cleanup steps. This is probably going to cover 70% of the problems with these two reports being unbalanced. Okay, so the first one we look at is we're going to go into our items list. Okay, so when we look at our items list, there's all sorts of service items, non-inventory, inventory parts, all sorts of things in here. Now, the first thing and the most simple thing that we want to look at is that we want to look at the account that these items are pointed towards. Because as I mentioned before, you can actually come in to a service item and you can point the expense account, as an example, to an inventory asset account. So what would happen if we did this? Every time we purchased this expense or purchased this item, framing, it would build that inventory asset account. So the balance sheet would be going up, right? So enter a bill, credits accounts payable, debits inventory asset. But the problem with it going this way is it's building, 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 and it's never relieved, right? We never have a relief of that, because at what point would inventory go out except for an adjustment? So it's rare that we have a service item hitting an inventory account. Now, just last week we talked about doing, WIP, work in process for labor or machining costs. So that is a time when we might see this happening, but they're not going to go into our actual inventory parts. They're going to go into a WIP account, right? And so when we're tying our inventory valuation summary report, it's not going to tie out to the WIP account there, okay? So one thing that you'll see is you'll see items being pointing to an inventory account that should not be. Right? Now, the other thing to keep in mind here is when I look at my inventory valuation summary, you can see here I have two types of items, inventory parts and assembly parts. So you do not see service items on here. So this service item would not be showing up on an inventory valuation summary report. Okay? So that's the first thing we're going to be looking for. We're going to be looking for items that are pointing to the wrong account type. So the easiest way to do this is normally account shows up on the items list. Let me go in here and edit, customize my columns. I'm going to add in my asset account and my cost of goods sold account and just move them up so that they're next to my regular account, right? This account here is your income account, really. And then what I do is I just sort the columns. So I look at account and I say, okay, this should be income account most of the time. Yeah, we have a bad debt in here or whatever it is. But I'm looking through and I just spot check, mostly see income. Now, if your items list is incredibly long, you might want to drop this into Excel, do some pivot tables, right? So you can see where things are total by. But mine is pretty short because we're just doing a basic one today. So everything looks like it's pointing to an income account, or we have sales tax, undeposited funds, so that's fine. So let's look at the COGS account. It's the same thing. I'm going to sort by COGS account. Now, a lot of these don't have a cost of goods sold account, okay? And as you guys should know by now, I definitely recommend never having an item that only points to a revenue account. I always recommend making it double-sided. So that would be something to fix, but that's not why our inventory is off. So looking at the cost of goods sold account, This item is pointing to an inventory asset account. Okay. Now also too, something to note, see how they're kind of out of order? If we switch to flat view, that is a better order to sort in, right? Because then it'll actually allow me to sort, not with headers being tied to each other. So my two inventory asset account ones are showing up here. So I see cost of goods sold, that's fine. Equipment rental, probably fine. Some expense account, inventory asset. So these guys, if I come in here and I look, you can see the cost of goods sold account is hitting inventory asset. So again, what that means is when I buy a light pine, my asset's going up, which is right, that's correct. But when I sell the light pine, my asset is being debited for the inventory part going out. Credited for the inventory part going out, which is correct, but it's also being debited for the cost. This cost should be hitting a cost of goods sold account. Okay. Now, a couple things to note when we make these changes. When you take and you change this item to be correct, so I'm going to push us to a cost of goods sold account. it will update all history for this item. Okay. So now my financials probably changed historically. So it's something to be aware of. Usually when we're doing cleanup for someone, what we'll do is we'll run balance sheet reports year over year, and then we will, so that we have that inventory account number, and then we'll run P&L reports year over year, so we have that P&L number. And once we're done making these adjustments, then we'll go back and adjust cost of goods sold and inventory correctly so that it matches what we said in years past, and then we'll just clean up in the current period. So anyway, hopefully that makes sense. But you just have to have awareness that when you make this change, it's going to change going backwards. So you need to go in and run backup first. Obviously, we do backup before we do anything. But go in and run those financials so you can make those adjustments and then force the balance into the current period. Okay. So here's the second one, inventory asset, and I'm going to push it through to cost of goods sold. Now, normally when we're making this move, right, to cost of goods sold, when we're making those historical adjustments, they're minimal because they're only affecting COGS and inventory. Those are the two things that are going to be off. And it's only for a couple of items, most likely. We have seen occasionally where some people put all of their, like everything was inventory all the time. So it's been messy to clean up. But we can help with that. Okay, so now everything's cost of goods sold, equipment rental, subcontractors, job materials, looks pretty good. Then I click on asset account. Everything in here is an asset account. Sweet, that's awesome. Now, one thing I didn't think of doing is actually making sure when you are reviewing this list, it's good to show inactive items when you review, because those inactive items could have activity that is also pointing to an inventory asset account. So it's good to include those inactive items when you're doing your review as well. Okay. All right. Now let's go ahead into the next step. So the next step, so already actually, let me just take a step back. Any step that you go through with cleanup inventory, it's always good to go back and review and see if you're any closer. So now my inventory, my balance sheet is now $30,983.38, and my inventory valuation summary report is $31,000. So we're significantly closer. So you can see that was a $20,000 swing, making that adjustment, right? Moving that to the cost of goods sold account. So it's definitely something that we need to be aware of and picking up as necessary. Okay, so then the next step that we want to do, again, pretty simple step. Now you can go in and do this in your items list also. This is one way to do it. And I'm going to show you another way as well. So when I come into my items list, I have my inactive items showing. And if I just click on the little X, it's going to sort by inactive. So now all my inactives are at the bottom, or I could have sorted in the top. And what we're looking for is we're looking for our total quantity on hand. And if there is a quantity on hand on an inactive item, so you can see this item is hardware doorknobs, hardware LK doorknobs. If they're inactive, they will not show naturally on this inventory valuation summary report. Okay. Now, one of the things they did a couple years ago is they added this box on the top, and it says you can show inactive, so then I can include those. Look at that, it pushes it right up to where I need it to be. You can show these items in here, but that's not fixing the problem, right? The problem is, why do I have inactive items that have a quantity and value on hand? So having this little checkbox to me is actually not helpful at all. So it'll add them to the report, but what we want to do is we want to deal with them. Either there's two things that we should be doing. Either, first of all, we should be making them active, because they should not be inactive if they actually have a quantity on hand. Okay, so you can just come in. I'll just do that with this one. Standard doorknobs, make it active. It pops it back in there. Now when I go to my inventory valuation, it's on this report. But let's say that this one, LK doorknobs, we actually don't need. So then what I want to do is I want to go in and make an inventory adjustment, right? So let's go in, adjust quantity value on hand. Whenever we do an inventory valuation adjustment, I always recommend doing quantity and value because you never know what you're going to find. So in here, when I find the items, I have to include inactives to be able to see that item, right? So it's not going to be there if I don't include inactive. If I try to just type in here, right, it's not going to find it because it's inactive items. The only way it's going to find it in here is if I type the exact same name. So I find it's easier to click Find and Select, include inactive, and then I can find that LK doorknobs. Okay. Now, a lot of times with our clients, they have a whole bunch of items that are inactive, so not just one. And so what we'll do is we'll actually drop into Excel, export all items, and it'll include in there what is inactive. Then we will make all items active by going into Paste from Excel and showing inventory parts, inactive inventory parts. Okay, so we'll go in and make them active, move their dollars down to zero, their quantity on hand and dollars down to zero, and then make them inactive again. And there's some ways to do that in Mass by adding like custom fields in here and saying inactive in the custom field. Anyway, so there's some little cleanup things in here. But again, we're just talking about basics, so everything, how you do everything manually. So I come and adjust my quantity value on hand. Yep. We want to adjust the new quantity down to zero. Going to take it down and look at the new value. See there? The new value is at negative 0.1 penny. This is why we want to have value included in here, because the new value should also be zero. If I left that penny in there, my balance sheet would hold that penny, but my inventory valuation summary would not. So the two would be out of balance by a penny, which would be super annoying. Okay, so we're going to adjust this. Now, here's one of the things, right, that is you want to keep an eye on. We see frequently where people, when they do an adjustment, they adjust against inventory. So I'm going to leave this like this just so we can see what happens on the other side. Because they think, oh, it's an inventory adjustment. Well, when we adjust inventory, we should be adjusting against cost of goods sold, spoilage, some kind of loss account, but it should be P&L most likely. Okay. When you adjust inventory against inventory, the debits and credits behind the scene is that this inventory item is going to go down by $4,302.35. And then the inventory asset account is going to be debited by that same amount, just not tied to an item. Okay, so let me show you what that looks like. So here's this transaction again. If I go in and I look at my custom transaction, my transaction journal report in here. So exactly what I was saying. Both accounts, inventory is adjusted. So it goes down and then it goes back up. And when it goes back up, it's not tied to an item. Because one side is tied to an item, the side that we're taking the item down to zero. The other side is just an entry, not tied to an item. And what will happen is then it'll drive the balance sheet further out of balance. Because now the inventory, that adjustment in the side that's a debit is now sitting in this balance of $30,000. But when I go to my valuation summary report, that item's not on here, right? So there's our variance in there. So we see that happen quite frequently where people will do inventory adjustments against inventory. So where we're at now in our PowerPoint here. So we reviewed the items. Now we reviewed the inactive items for coin on hand. We got rid of those. Now we're going into the custom transaction detail report. And this is how we're going to pick up these last things. So before I go into it, the other thing that we will see frequently is people will put in bills, right? And so they'll put in a bill to whoever, and they'll post directly to the inventory account instead of going through an item. So anything that posts to the inventory account really should be posting through an item, and it should be an inventory part, right? That's how we get that inventory valuation summary to tie out. So if I go inventory asset here, it's going to point to my inventory asset, but it's not going to know what item to put it towards. So it's going to debit my inventory asset, but because it doesn't know which item to point it against, it will not show up on my inventory valuation summary report. Okay. So we see this frequently. We see the adjustments against inventory frequently. Those are the two. And then we see just straight journal entries frequently too. So those are the most common step 3 for what we're trying to find for step 3. So for step 3, so again, before I go to step 3, I run my inventory valuation summary. It's at 34,881. I run my balance sheet. It's at 38,983. Still not in balance. Got to keep pushing forward in the next step. Now, if they were in balance at this point, I could stop. I don't need to push forward to the next step. So I'm going to come in here and do my custom transaction. You can do summary or detail. I like detail because I like paying attention to all this. So we're going to run this for all time. We're going to total by item detail. And we're going to filter to just run for inventory asset account. Because basically what we're saying at this point is, I want to see by item total what the balance sheet is recording for each of these items. So if I look at this cabinet pulls, right, cabinet pulls is showing 108260, and then I go look at my inventory valuation, those two should tie out. So what I'm looking at on this custom transaction detail report is at the very bottom, 38,983.38. Well, I should be running this through 12/15, right? Let's be real. Let me get the dates right. So at the very bottom, 38,983.38, that should tie to my balance sheet because all I'm doing is I'm just running the detailed transactions for my balance sheet. And then what I want to do is I want to compare the items. So the first one, 108,260, inventory valuation 108,260. Next one, 9,000. Look at my custom transaction detail, 9,000. Now I could go line by line on this, but that is kind of part of what we talk about with the detailed cleanup. The most simple cleanup and the most common, so step 3 in our basic cleanup is actually to scroll to the bottom of this report and see what is in this report that has no item tied to it. Okay. Because if it has no item tied to it and it's posting to the inventory asset account, it will not show up on this inventory valuation summary report. How do we fix it? Now, a lot of times we're not going to go back. Usually when we're doing inventory cleanup with people, or if you're doing it on a monthly basis, which again is the best way to do this, that you can go in and actually just edit the bill, right? I could go into the bill and say, oops, it shouldn't have hit inventory asset. It should have hit this particular item for quantity, and like go pull up the bill, right? Quantity of 80 times 100, and get rid of it off of the expenses tab. So if it's within the same period, this is why it's so important to do it in a timely manner. So in the same period, I can go correct the transaction if necessary. Okay. Then when I come back to my no item report down here, look, that no item report has gone down. Now, obviously, some of these, like this one, has inventory adjustment in a previous period, a year ago. That's just sitting in there. So what happens with these no item transactions again is that in this case, credited inventory for $8,500, but it's never going to be relieved until I do this activity to clean it up. So that inventory balance, when people talk about they don't trust their balance sheet, they don't trust their financials, it's because I have this balance that's sitting there. It's been sitting there for a year that has never been relieved. And in inventory, we expect, we're doing our estimates appropriately, we expect inventory to turn. There should never be a balance sitting there for a year. Then that means that we have inventory that's not usable, possibly. So we never want to have that happen, right? That's why we never want to have no items pointing to the balance sheet. So how do we clean this up? Again, usually we're doing a one-time cleanup. So what we do is we come in and we make a journal entry. I say never make journal entries to inventory, but it's only to clean up, because what we want to do is we want to get this no item to zero. So I'm going to come in and make my journal entry. I'm just going to make it as of today, inventory asset account. Now you can see in here, right, it's sitting, the balance is sitting as a credit balance of $3897.65. So I want to debit it, 3897.65, to clean up inventory once and for all. Woohoo! You do your classes, you do all the things, and it's probably going to adjust to some kind of cost of goods sold account. When we're doing a massive inventory cleanup for people, what we do is we actually set up a inventory clearing account on the balance sheet, and we run all cleanup items through that inventory account so that we can see the net, right? So I had to move my item out of an inventory asset account and into a cost of goods sold account. Whatever that adjustment was, I move it. I see the net of all of these things that I had to do to clean up, and then I make the adjustment finally off to cost of goods sold. So inventory asset here, cost of goods sold here. I go ahead and say save. Now, I always save on journal entries because I don't trust my debits and credits of my own brain sometimes. So I want to come back in here and look, I did it correctly. So now my no inventory balance is at zero. That's what you want to see. When you run this custom transaction detail report, filter it for the inventory accounts, and it can be filtered for multiple inventory accounts if you have multiples. But you want to get that down to zero. No item should always be zero. Okay. Now, I come in, I run my inventory valuation summary report. Look at that, 42,881.03. I compare it to my balance sheet, 42,881.03, and I get to stop because it's clean. And wait until next month when somebody messes it up, right? Okay, so that is the basics of inventory cleanup. These 3 steps are the most basic things. Well, it's 4 because you want to look at the tile, right? But these are the most basic things for you to clean up inventory. Coming up in the next couple weeks, because we're running up against time, and I know it's a busy week. Coming up in the next couple weeks, so we do have multiple vendor price lists we're going to be talking about next week. Holiday week, I know it's going to be so much fun. You guys want to talk about New Year's and multiple vendor price lists. So we're going to go over that next week. Serial numbers, multiple warehouses coming down the pipe. We have some WebGility webinars coming up as well. I know there's been a lot of questions around WebGility from people. I've been getting a lot of them. If you guys see anything that's not on this list that you wish was, please make sure to let us know. And then if we cannot get to your questions today, because I know it's a holiday week, so it's a little bit quick today, but if we cannot get to your questions, we will follow up. And you can always email me if you have anything. Just a reminder, what our formula for success for our customers is that we are always focused on data to get you data to make decisions. This is why that inventory valuation summary is so important. If you do not trust that inventory number that is on your balance sheet, then you do not trust other areas of your financials. And so that's what we're always focused on here, is making sure that when you run that financial report, you trust those numbers. Okay, so those two reports need to balance. Okay, guys, that's all I got for you this week. I hope everybody has a wonderful holiday week. Stay safe and healthy. Has fun with family. Thanks so much.